Welcome to Markets Now. I'm Michelle Rourke with Brad Quim of Varlick, and we're seeing mostly higher prices over on the grain trade. Soybeans starting off lower, but trying to go along with the corn and wheat market now. And then over in the livestock futures, hogs are lower, cattle to the plus side. And Brad, let's talk about the cattle on feed report. Pretty bullish placements number, wasn't it?
Absolutely. Finally, after month after month, it seemed like, where the placement numbers would come in higher than expected. So that started back last fall already. So I think when you get a report like this, it fits in with some of us here that are going like, well, are you kidding me? We don't have an endless supply of cattle to place. We know that calf crop was smallest in 50 years. Okay, we know the cow herd's the smallest since 1951. So it's just you don't just drop these calves out of the sky. So it's a relief, and some vindication, I think, for the fundamentalist that says, okay, looks like that dog ran to the end of its chain. That's it. We're running out of cattle available to place, which is what every report, including the cattle inventory report of January, which it's annoying as all get out to me that we're not going to have a July one. It's ridiculous. It flies right in the face of market transparency, and everybody should be mad about it. I am. Anyway, so it fits, it fits. And then when you get the quarterly data on this report, where you get to see what the heifers and steer ratio is, still placing a ton of heifers, still have a ton of heifers on feed. So it would appear that if retention started, it was just started, just now, because it's not showing up on the reports yet. So yeah, it's fun to see the placement number, getting the on feed number a little closer to par. Marketing number, that's a little different story. That was a little disappointing.
Yeah, let's talk about that in a moment, but let's talk about the state-by-state breakout of the placement numbers, because certainly an indication that they're very tight down in the South, right? Or they're not placing as many cattle.
No question. This movement of cattle is moving back to the North. Texas placements at 80% of a year ago, 80. Kansas at 87. Colorado at 87. Begs the question of why. I'm always kind of a anti-formula, pro negotiated trade guy. But I think they've had some challenges with feed cost. I think they've had some issues even with, being able to, a lot of people I talk to down there, they say, well, we don't buy cattle unless they work. I'm going like, oh, right. Because I do buy a few cattle myself. I know what the odds of that happening and being able to do that. So some of this, and some of it's a distribution of an available supply. It's going to go somewhere, so the inability to have a byproduct to feed, for instance, such as distillers, and being able to feed them cheaper, frankly, up here. The father-son guys can certainly do it more efficiently than a large corporate yard can. So it's interesting, though, because the placements, continue to be pretty good. 96% in Iowa, 94% in Nebraska, and that's been the pattern. So it looks like these cattle are moving a little bit back here toward the north.
So placement showing us we're just that tight, but let's deal with this marketing's number. It was a bit bearish. Talk about why.
First of all, it's because there was 2 less market days compared to a year ago. So that amounts to about 10%. So if it would have been 100, it would have been 90. Does that make sense? But it was still below guesses. So it was still a little bit of a disappointing number, right? And the spreads reflect that. April's up, but not nearly like the middle and the back end of the market is. So that's why. Now, as an analyst sitting here trying to look it over, I think that the market is going to say, well, but the slaughter levels for the last 3 weeks have been much improved. So we probably have caught up a bit of that backlog already, if there is any. And then, just visually here, sitting in Northwest Iowa, where the heavy percentage of cattle for Iowa are all within the 6 counties where I sit, we don't have a backlog of cattle here at all. In fact, we're extremely current here, which is encouraging, because usually the farmer feeder is the last one to get current, and we are. The people I talk to in Northeast Nebraska, I can't say that anybody there is telling me that they've got a big worry about a backlog of cattle. Michelle, don't forget, when the market function, I don't mean to sound condescending, I apologize. I think what's happening is the function of the market here, what's happening is that because of tighter supply, we're forced one way or another to get more production, and so we're doing it by having more heavier cattle,
by the
right?
weights.
Yeah, beef production is still above a year ago with less cattle but more weight. I'm afraid that that's going to be something that you and I are going to talk about for a couple of years as we get into the real tight numbers, which are still in front of us. It's just going to be a necessary evil. I think we're going to be encouraged to feed them bigger. Look at the tilt of the market today, where the back months are stronger. You're going to go back to big premiums in the back, I'm afraid, which is going to make the feeder cattle cost a little more than you'd like if you're a feeder, and probably incentivize everybody to feed them a little bigger, which is going to make it a little trickier on staying current.
Yeah, I figured we'd bear spread the market today when you have an 88% placements number and 86 on marketings. That makes sense. What does all this mean for the cash trade? We did have a victory last week, it looked like, with some steady cash trade in the South, but do we have some upfront numbers here we're going to have to work through, or what's your sense this week?
Well, last week I was a bit of an outlier. I thought we had a chance to be steady to maybe even a little higher, so I was wrong. The North was hardly steady. I'd call it a week steady. A week before we could have got 85. I couldn't get it last week. Some of the addressed beef bids were about steady. The South at 182 was I think encouraging. Like you said, most people thought they were going to, continue this pattern of 2 to 3 lower, 2 to 3 lower, 2 to 3 lower week after week like they've done. To me, we stopped the leak. You're close enough now to Mother's Day where the next move on the beef is going to be higher. I think that should encourage heavier kill, which we saw also the last 2 weeks. And I think that's going to support a steady, better cash market, in my opinion. The North, I think, will continue to carry a couple $3 premium to the South, but I'm going to expect to call the market higher both here and in the South. Let's see if we can't get the North back to something closer to 87 and maybe the South to 83 or 4.
Okay, that would be good. It would break our trend of 3 or 4 weeks of lower money here now. Okay, let's deal with a couple of other headlines. We have the Gibbons, Nebraska plant. There was a fire there. Any impact that you see?
A little short on details yet at this point, but it's a cow kill plant. I don't think it's a large plant. Fire in their rendering department. What they're saying officially is no kill today or tomorrow. But again, it's a cow kill plant. We've killed a zillion cows already. I can't imagine there's many of them left over to kill. I don't think it's a market factor, and it doesn't appear like the rest of the futures traders think so either. But it is out there. It is a news item.
And HPAI now confirmed by USDA cow-to-cow transmission. Market seems to be handling it quite well.
I hope we're done with that. But it feels to me like we are. I really thought last week we went the whole week without really the market, stubbing its toe at all on bird flu news. And it doesn't appear like we are today either. So hopefully, and as we get warmer weather, most everybody thinks it's going to kind of, go away for now again. Sure. Anyway, so I think we're over the bird flu. I say that, and then I worry that something else will happen, of course, but I believe that little issue is behind us.
Let's hope so. Hog market, nice chart breakout on Friday. No follow through today. So some back and fill here. Hedge pressure, what is it?
Hogs are whippy. And I've admitted to you many times that
they don't make sense some days. I get it.
Every market's hard to trade. This one is really hard for me to trade. I don't know, the fundamental crowd that we run with, that Joe talks to on a regular basis here, one of my partners, they remain optimistic. They feel like moving into this summertime that the effect of that little bit of liquidation that we saw last year is going to finally show up. Procurement of feeder pigs is a little bit harder to come by. I don't know. If someone was to say to me, do you think summer hogs could get to 110? I'd say, yeah, I think they can. Mark me down as being a little friendly. It's the right time of year to be a little friendly too. Gotcha.
And the grains to the plus side this morning, follow through buying here after a higher day on Friday, but it looks like wheat is leading. But what is your thought? Would corn be up if wheat wasn't higher, or can it stand on its own?
Maybe, but what about the beans? I mean, they are such a weak sister here.
Yeah, we've got South American hedge pressure there, I think, don't we?
Yeah. But the beans have got a headwind. I feel more confident in the corn. Obviously, we're getting some leverage here out of the wheat market, and that directly impacts the corn. And I think that's maybe less than perfect weather for a moment on the wheat. I don't get too hung up on that wheat. One of the guys in here likes to say, if you can spill it on the pavement, and if it rains a half inch, you can still raise it. I'm kidding, sort of. But I mean, you're far from losing the wheat crop here at the end of April. But to me, the corn thing has got some fundamentals that are encouraging, strengthening basis all around me. And that's been influenced greatly by the ethanol grind, which is either at record margins or close to it. So with those two demand features out there showing you, I just think the corn thing can try to rally a little bit. We're running thin a little bit on the seasonal. So guys, don't forget, from March 1 to May 1, there's usually a bounce. So now we're getting it. And I'm not particularly long-term bullish either the row crop stuff, the corn or the beans, but maybe we got a little gas left in the tank. But you're in that seasonal window where you think more about selling than buying.
Are you worried about option expiration and having to roll or price some of these basis fixed contracts again here as we get into first notice day?
Well, that's a good question. Might be above my pay grade. Fund's pretty short. That'll add a little bit to it too, I think.
Yeah.
From these kinds of levels, maybe those sorts of things give you a better chance at a pop. But I would say the best chance at a pop is if you get the corn high enough to develop some short covering from what is a pretty large fund position there. So, but I would love to see December corn toward $4.90, $4.95 to $5, but I'm not real confident we can get that far, I guess, Michelle.
All right. Thanks for joining us. As always, Brad Koima with Koima Varlick. That is my